All right, guys, welcome to day 17 already of Anomaly sequence. Today, as mentioned yesterday, I'm going to be talking to you guys about how you can make a start of day report and pretty much the key things that you want to be noting down for your start of day, right? So we talked pretty much about your EOD, right? Your end of day, how we are looking at the daily time frame, how that does the heavy lifting for you. Pretty much the way that the end of day report, how you go into the morning, how you've prepared, pretty much how far away you are from your drawn liquidity, how far away you are from pretty much the plan, what you've done with your start of week, whatever. At the end of the day, what we're doing is the wherever you start counting pretty much with your start of day EOD. What we always want to be doing is kind of making sure that we are going off of the backbone of our EOD. You don't really hear that often. Many people will just come in fresh, right? They'll come in fresh from the day, but that's very momentum based, right? What you see a lot is that people will make a start of week. They'll make a start of week Monday, Tuesday, Wednesday. That's it, and then Thursday, Friday, they forget about it. They don't adapt. They don't change their annotations. If they're trading a similar style to what I'm teaching you guys, they don't really do the whole intraday concepts, and then boom, they miss out on the opportunities that present themselves Thursday, that present themselves Friday, and whatnot, right? At the end of the day, what we want to make sure is that you've got this active relay. It's like a pendulum, and this momentum that we're creating is off of the backbone of your EOD going into your start of day and so forth, and then the same EOD on that day and so forth. So again, the end of day report, the EOD, right? What we do is we look at the daily time frame and we're looking at stuff like how far away your instrument is away from, let's say, that draw on liquidity, right? If you don't have a clear draw on liquidity, that is something that we will have to sharpen in the technical aspect of things. But overall, price should have some sort of clear draw on liquidity as to where you want price to be going to into the daily time frame. Whether or not that is an array or a high or low, that is up to you, right? I like to always do highs and lows, right, as clear drawn liquidities for myself. The reason for that being is because that is more the way that price transacts naturally. That is more the way that price goes from arrays into, let's say, highs and lows, and vice versa, right? After taking out highs and lows, going back into arrays and rebalancing those levels. That is when you start playing counter stage, right? It should all slowly be clicking to you the way that I trade, the way that I'm showcasing you guys liquidity concepts, the way that you got to look at price, right? So let's just go back a couple of candles, right? And if you can make some sort of start of day, and this is a very good example. This was kind of the last couple of moments, which were actually nice tradable areas, which I unfortunately didn't really trade much, just missing out on opportunities like this. But overall, you can see that here, when these two highs were open, right off of the backbone of, just these two levels acting as BSL, you can see that that was our main drawn liquidity, whether that was the weekly, whether that was the daily, the monthly. Those were all pretty much those interim levels where we wanted price to go to. Above that level, what we had as well was obviously an imbalance right here, which was left open, which we now have also tapped into recently. But at the end of the day, this was pretty much all kind of the signs for price to go more to the upside, right? So your EOD report would consist along the lines of checking and seeing how far away you are from that distance, right? So current price action, you'd realize, okay, hey, I'm roughly 130 pips away from my first level, and I'm roughly 168 pips away, 170 pips away from my second level, from my second draw on liquidity. That's kind of the way that you're looking at it. That's kind of how you're doing your report at the end of the day, right? You're realizing, okay, I'm X distance away, fine. You wake up and then boom, voila, you look at kind of the daily open, right? Let's just say you wake up and you print something along these lines. We obviously cannot replicate it just just as accurately as we want with candle open and the actual time limit that we can see here on the right. But you get the gist of it. Then from the stuff that you've looked at, right, from the stuff that you've looked at on your EOD, you will obviously be looking into, hey, what's the plan for the day? Right, so you go from the daily time frame into your flow state. So we did monthly, weekly. We've identified pretty much our stage, right, which is in this case bullish, right? You understand that that's the most probable route for price to go into with least resistance. And then from there, we've done our EOD on the daily. We talked about how far are we away, and that kind of becomes your range of opportunity, right? Your range of where you're looking to participate in the market, right? You identify one of two things on your start of day, okay? So once you've pretty much identified, okay, hey, from this market open right here, pretty much let's just say something along these lines, from that point onwards to these highs, that is going to be my buy side potential, where I want to keep looking for buys. That's pro stage, we call that. From there, you go into 4 hour, right? Your day starts, you're on the 4 hour. Let's just kind of put it back just 2 candles so you can see on my crosshair at the bottom. So if we can do that. Like this, let's just put it like this. And that is pretty much your start. You realize that these levels above are still very much far away, right? And you kind of now break it down. Your start of day is kind of refining what you've done on your daily. So you understand that, hey, on the daily, we're looking to still get buy side, but realistically, now you ask yourself one of two things, right? We talk about the basic 3 things, always. Start of day, where's price right now? Where did it come from? And where is it most likely going to? At least, what do you want to see, right? Those are kind of the odds that you're putting. So we ask that again. We understand that price is right here. Right here, this is pretty much where you open up. Let's just put it like this. Nothing too crazy. You ask yourself, where did price come from? Where you did your EOD report would be anywhere around these candles, pretty much, right, on a Wednesday. Seeing this, but you understand that this is kind of the most recent leg at the moment, and then you ask yourself, hey, you look to the left. Do we have any arrays that price obviously respected here? We do, which is an imbalance right here. Right, annotate your order flow as well, something along these lines, right? Boom, this is where bullish order flow is being respected, right? We've got arrays, it is being mitigated right here. You can fine tune this, right, for the guys that know stuff about BPRs. Super cool, voila, not too difficult. You can see the price tapped into BPR here. Here it respected the midpoint of that imbalance. Cool, sick. Lots of cool stuff happening here. Then obviously when you understand that question, right, this is where you take it to like a next step. So you understand which arrays are being where price came from and which arrays it is respecting, right? If any, very, very important thing to ask yourself, if there are any arrays that you can even draw. You can even draw this as an order block. I'd rather not. You can't draw this as pressure. You can draw this as pressure. Slowly giving you guys just a fully annotated chart here. Annotate this as pressure as such, and then pretty much what we're looking at from there is, okay, you ask yourself, hey, which arrays did price respect in the question of where did price come from? And then you ask yourself, what are the opposing arrays there are, right, on this time frame on H4. So we've got a couple. We've got this one, obviously, this bearish imbalance, okay? Just like that, we understand there's a bearish imbalance. And then you look a little bit more to the left. There's no OBs that we can couple, but there is a shift zone here. Right? This. Bearish imbalance, bearish shift zone that we see here. And suddenly you realize, okay, hey, we understood price is coming from this buy-side momentum, trading into this bearish kind of like high resistance area. And now you got to ask yourself, what is the plan for the day? Where do you want to partake in, right? What is your draw liquidities here, right? Your higher time frame, the stuff that you've done on daily, weekly, monthly is all here. These levels as such. From these levels right here, what you can see is actually how we've got kind of the main bias to still go there, right? We've got the main concept to go to these levels, but we are kind of in the crossroads of this H4. So by doing that, you automatically already position yourself in, you either you're confident about what you're looking for, the setup that you're looking for, or you are not, right? You are understanding you got to sit on your hands a little bit more, you got to wait for a little bit more development, or you just got to let price kind of showcase and show its hands a lot more. In this case, you've got one of two things. You've already got to move to the upside. You've got bullish order flow that kind of got in control, but you can now start asking yourself a little bit more stuff, right? We've got like resting liquidity here, right? This level like this. We've got these levels, but you've also got just a new level that you can then target, right? You can target and understand that you can draw this interim level. So aside from the external buy-side liquidity that we drew here, you can now understand these are kind of the parameters that we have. These are the levels that we're looking at. And this is kind of how you break it down, right? Day in, day out, this is what you got to be doing. It's not that difficult, right? It shouldn't be that difficult, at least from my understanding. Too many people make it so complicated because they don't do this. You make life easier for yourself by doing this work. You get clarity on your charts by doing this. If you don't do this, you clearly lack clarity. Then in this leg on its own, right, when you go back to the 3 questions, you can see that what's kind of the most recent price action that is in control. It's still a little bit of bullish price action that is here, right? A little bit of things that we can see on this side. Buy side, bullish imbalance to this end. Couple that up with something along these lines, like a mediocre OB, you can still see that that is also the case. So there's bullish order flow in kind of the leg upwards, which is trading into this bearish imbalance. So you've got kind of one of two things. In this scenario, right, when you do something along these lines, it's not evidently clear, right? You've got your bias wants to be long, but you've also got a stack of bearish arrays against you. Make that a little bit more clear, and you can see that if we add some sort of dealing range to that, we're also very close to our EQ of our dealing range. Not ideal, right? When you look at it like this. When you put everything together, you're not a huge fan of what we got here. And that's kind of, how you do your start of days. You look at these things, you look at these candles. And then from here, what you can do is obviously go into H1, right? That's the next step that we want to be doing here. So we'll create a group here of drawings that you can do here on the right. Unfortunately, you can't see that on my screen, but you can call that H1, shift key, and then go into H1 along something like this. And then you do exactly the same process, right? If we go H4 on H1, we got a little bit more information, but this is pretty much your start of day, right? If we go into, let's say, just showcasing our Asia range like this, you can see that this is our Asia range. If we click a couple more candles, right, like this, you can see this is pretty much where you are awake and what you're looking at, right? What you're going to be targeting, and where you will be looking and doing that analysis that we just did, right? So you can see that, we've got this huge spike to the downside, huge drop to the downside, leaving behind an inefficiency that you can fine-tune, refine on H1, right? Overlap that like this, you can see that the midpoint here is a lot more accurate than what we had on H4. Right, you can see that this looks very, very sleek. Overlap, BPR, whatever. If you want to go advanced concepts, you can see behind my face, like here from this leg right here, this bullish leg, there's a gap as well. There's a little bit of an imbalance here, and that kind of becomes a BPR as well. That goes like this, and you can see how price delivers into that, which is nice. Other than that, you're doing the same stuff, right? You understand that low that we created here wasn't too exciting, was a level like this, a wick. Then aside from that, right, we've got this imbalance right here that kind of held, and then you can see that these wicks here as well. Overall, same concept. You ask yourself the three questions, and then you ask yourself, where do you want to partake in? What are the moves that you want to be doing? Are you going to be playing against your higher time frame bias? That's the first question you ask. Will you trade against that bullish bias that you have with those external drawn liquidities that you have? Whether you got something like this or anything else, right? So what we do, right, is we ask ourselves that question one more time. So in this case, right, you can see I'm just like clicking through. Very, very, very boring day. Not the nicest, not a lot going on. But overall, if you want to like conclude that, right, you would see something along the lines of price going lower, right? So quickly, you could have concluded that that would have been some sort of sideways day. Clearly, not a lot to really partake in. You can see, especially with that EQ that we drew, something along these lines. You can see that we were around EQ the whole time, going lower, trading into that H1 imbalance. Nothing too special from that either. Not the most exciting things. But let's just take it for an example. Let's go into pretty much the next day, right, with this H1 information. I'll click a couple of candles like this, right? And after having done so, you can pretty much see, okay, hey, we've got a little bit more information. Ask yourself again the question from this perspective, do you want to be trading against your higher time frame bias, which we had on daily, weekly, monthly, or is there something that you can be looking for, right? Kind of the information here says a lot. From this area, no real follow through. From this area, no real follow through either. And we've got bullish order flow that kind of held, right? So overall, very, very much, prefer to go into buy side this level and this level that we got going on. And then you ask yourself, hey, what are the moves that I want to be partaking in? And on H1, it could be super simple. This is kind of difficult in this case, right? We've got like a relative equal high here, right? So we annotate that as such, relative equal high as such, where we want to potentially target that. We've obviously got the distal line, the one that is furthest away of this imbalance, which is here. So anything kind of along this line would be sick if we can get pullbacks here and then go for this level, that would be very, very nice. But that's how you create a vision. That's how you get clarity. That's how it becomes a little bit more clear for yourself of what you want to be doing. You answer these questions and be completely transparent with yourself. If you have a start of day and you said, will I be content trading against my higher time frame bias? If the answer is no, and you were very confident in that, keep that, right? That is what's most important. You don't go against your thought process, right? Many people, they'll create a thought process, they'll create a plan, but they'll deviate from the plan. You have a plan. The biggest reason why majority of you guys fail is because you don't stick to the plan. Simple. It's not that difficult. And if your plan is not clear, then obviously it's a lack of knowledge and a lack of experience and a lack of data. But you need to have a plan. You need to have rules in place of what move do I want to participate in? When can I participate in? Right? But then if price starts dropping like here and it goes lower, right? Then why would you, if that wasn't in your plan, then why are you looking to short that? You shouldn't be chasing price here. If you already know beforehand, this is what I want to play and I'm only looking for this, then wait for your execution criteria to show up. That is your start of day. Your start of day is deciding whether or not you will be trading that day, whether or not it is going to be, which direction are you trading, and how many parameters you will be putting into that day in order to give you the most efficient and highest estimated value. It's all about EV, right? You're pretty much putting a playbook out, and if price does not move according to your playbook, there's no reason to get involved. And often enough, price, we don't hold a magic ball. Price will not do what we expect. It will go lower, and then you're trying to chase price here, and that's where you lose. Low probability, not according to your plan. You understand, you have the data, you have the validity of your trading plan, of all the stats in your edge, of what you know best. So if price doesn't show that, then there's no reason to even participate, right? And that's the error that majority make. So let's kind of just go over this example, see what price does in this case. So in this case, you know, we're just on H1. We don't want to go into ETFs, but we see one of two things right here. Majority Asia high, looking for a shift, would potentially go lower. If that's in your playbook, cool. But if we have some sort of closure here, all right, people could get knacked. Then what we see, bullish continuation, bullish continuation. We leave behind an order block. Even on H1, you can see that there's momentum to go higher. Leave behind an imbalance even, you know, that's great. This is quite clear, right? And then suddenly you get stuff in New York where you want to participate and then you see this price deliver, which is nice. So this just showcases, right? You know, here if you had a plan and you understand the movement, the what you're looking for, coupled with your execution time frame, then you clearly have some sort of easy plan that you can follow in order to go to you know, the path of least resistance. And this is exactly that, where we're taking out this level. You can see a reaction to the distal line coming back into a raise and then delivering higher to the main draw on liquidities. So overall, that's that, right? Not difficult. All these levels getting taken out in one go, and that would have been part of your start of day if you were looking for that. So I hope that that kind of makes sense with how you make a start of day, what you're looking at. What type of parameters, what type of time frames. You can see that with start of week, highest time frames, you're doing monthly, weekly, daily, 3 month. Start EOD, right? You're doing daily majority of the time. You're just doing the heavy lifting. And then start of day is you're getting closer. You're using all the information you've already built up, all the information you already gathered, and you're going into the lower time frames to prepare yourself for potentially the sessions where you want to be trading, right? Too many people do too much also. Start of day, you should just have, okay, hey, the plan is my plan forming. Can I go into my ETFs? Yes. If that's not the case, don't go into your ETFs. Many people, they'll pre-London, they'll already be on M5 pre-London. Don't do that. That's not the smartest thing to do. So just stick to the basics, stick to what works. Profitable trading is super boring. So there's no need to chase into M3, M5, M1 if that's not according to your plan. Okay? So I hope that makes sense. I hope that you gain some value from this, and I'll see you guys in the next video tomorrow.